Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Your Stocks with me, Vinny Motiwala. A quick look at what the market is doing today. 23,120, around that mark, what the Nifty is trading at. Today's lowest point, down 300 points. 1.3% decline coming in for the Nifty. Sensex 2 is seeing a more than a percent of decline in trade as well. 1.2%, 76,450, around that mark is the Sensex. Nifty Bank, that too is trading with cuts of around 1.3%, so in tandem with the benchmark indices. Where the sharper cuts are coming in is the mid and small cap. Mid cap down 3.6% in trade, small cap down 600 points, 3.8% decline coming in for the small cap as well. So sharp fall coming in for the mid and small cap, the broader end of the market. An advance decline ratio clearly today is in the favor of declines versus advances. Fourth consecutive day of fall that we're seeing coming in for the Nifty. Top drags that we're seeing is HDFC Bank, ICICI Bank, L&T and M&M, while some bit of a respite and green movers today in the Nifty 50 only coming in from TCS, Axis Bank as well as IndusInd Bank. Small moves, positive moves coming in on that front. But yes, that's how the market setup is looking like. Rupee is also something that you're watching out for, and all the sectoral indices that you're seeing today is trading in the red. On that note, let's get started with the show, which is mainly solving all your stock related queries. And today we have our experts joining in with us, Ashish Kyal of Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Geojit Financial Services. They're joining in with us to solve all those doubts you all have been sending us. Ashish as well as Gaurang, thank you so much for joining in with us on the show today. Dull day coming in on the markets, but we have a lot of queries that we should be solving. Let me start with the first one. We have Miri Yala, who is writing to us from Vijayawada, holding 200 shares of Aarti Industries at a price of 720 rupees and 80 shares of IndusInd Bank also at a price of 1,390 rupees per share. Wants to know whether they should continue to hold this or look to sell this one. So in terms of obviously the two stocks, Aarti Industries and IndusInd Bank. Gaurang, good afternoon, and what's the word for both these stocks?
Well, thank you so much for having me on the show. Good afternoon to you and to all the viewers of CNBC-TV18. Well, both, in fact, have been quite challenging in terms of numbers for the second quarter gone by. And both Aarti Industries as well as IndusInd Bank delivered numbers which did not really go down with the market. And hence, the resultant is that the stock prices are where they are. Now, having said that, if the investor has a long-term time horizon, firstly hold on to it. But the investment needs a remedial reaction also. And the remedial reaction would be in form of adding on to the stock, both Aarti as well as IndusInd from a long-term point of view. Right? Okay, if you got invested in a stock at a higher level, that's not a problem, provided there is growth visibility, which we believe is definitely there for Aarti Industries and IndusInd. So you need to average. She's got maybe a decent quantity of Aarti and a little bit smaller quantity of IndusInd Bank. My advice would be to average maybe about 50% of the total quantity what she holds at current levels. And if she's got investable amount and in the market gives you an opportunity at a little bit much lower level, then you should average there again. But hold and average would be the recommendation.
Okay, hold and average is the recommendation coming in from Gaurang. Ashish, what's your word on both Aarti as well as IndusInd Bank? Because both these stocks in the last 1 year obviously have seen a decline of more than 30 to 40% in that range. So interesting on the charts also, maybe to average out.
Hi, afternoon to you and all the viewers. If you look at Aarti Industries, I think the stock has been in some pressure for sure. It was around some 550 odd levels, 650 odd levels. Sorry, from there has been a correction. We are yet to see any kind of a positive reversal yet. So I would recommend to continue to hold for now, but maintain a very strict stop loss of around 390. In case the stock breaches that 390, then there can be some pressure over short term. On the upside, we need break above 450 levels for some kind of a stability. And given...
I think the line with Ashish has just got disconnected. We'll connect back to Ashish. But on the note, let's actually move on to the next query till then. And Titan, that's the next query on. We have Mayank Khanna, who's writing to us from Bhopal, holding 20 shares of Titan at a price of 3,000 rupees per share. Wants to know whether to hold or sell this one. What's your view coming in on this one? Titan, Gaurang, how is it looking like? Still something that would shine bright?
Glitter, I would use the word shine and glitter, to be very honest. And that's primarily because of the diversified contribution that comes into the balance sheet. Yes, you have gems and jewelry, which contributes to the great extent to the top line and bottom line. But along with that, historical business in form of wristwatches, which is doing very, very well. You have acquisition in form of Carrot Lane and high-end jewelry segment, which is also operating quite well. You have personal accessories in terms of perfumes with the brand Skin from Titan. You also have eye care and other accessory businesses. So put all the equations together, and to sum it up, yes, hold on. A very conservative target, very honestly, is somewhere close to about 3,600 plus. And I'm quite sure on earnings visibility and the way gold prices are moving, this stock, Titan, should do well on the earnings front as well.
Okay, we have Ashish back with us again. Ashish, what's your view coming in on Titan? Our viewer has bought this 20 shares at a price of 3,000 rupees per share and wants to know whether they could hold or sell. So your view on Titan?
See, if you look at Titan, over short term, yes, there has been some kind of a pressure, but I think the stock should also start performing well once the cycle turns back on the upside. The view has to be at least from a year and a more perspective over here, and I think Titan should reach towards the level of 3,800 eventually. So continue to hold on to the stock, maintain a stop loss of 3,240, and overall the stock should perform well.
Okay, overall the stock should perform well. That's a word coming in from Titan. So keep an eye out on that one. Maybe you'll have to hold it for some bit of time. Let's move on to the next query. This one is on ONGC. Now, obviously, we've seen all that action that's happening in crude. But Rajat is writing to us from New Delhi, holding 100 shares of ONGC at a price of 70 rupees per share. Wants to know the long-term view on this one, on the stock. ONGC, what should they be doing with this? They're making some bit of a profit right now. Gaurang.
So, when you buy a stock at such a valuation, and if you have a less quantity, your move towards increasing the investment in ONGC has to be at a larger scale. Even at current level, somewhere it is 250, 256. We have a buy and a hold on ONGC from a long-term point of view. You have a good dividend payout ratio. Yes, crude oil is on the boil, and that will create a little bit of uncertainty, pressure for both OMCs as well as oil exploration companies. We remain positive. 330 is a very conservative target, long-term ONGC.
Okay, and what's your view on this one, Ashish? ONGC on the charts, what's the indication?
See, ONGC made a low around the levels of 230 and showed a very sharp rise towards 275, and now it's possibly retracing a portion of it in the form of wave 2. So I'm optimistic that ONGC should do well, and I concur with the targets of around 320, 330 levels that we should see. Over short term, there can be some pressure, but eventually the stock should move on the upside. So continue to hold here, and stop loss can be maintained at 245 levels.
Stop loss can be maintained at 245 levels. Keep an eye out on the mark there. Let's move on to the next query. We have NTPC. That's the stock we'll talk about. Shalini Srivastava, who's writing to us from Pune, holding 100 shares of NTPC, and this is at a price of rupees 80 per share. NTPC currently trading at 300 rupees per share. So what she wants to know whether she should continue to stay invested in this one, or maybe book out the profits. In the last 1 month, seeing a bit of a decline coming in, though she's bought it at 80 levels. Ashish, your view on NTPC?
She has bought, first of all, she has bought as an excellent level, and she has been riding it all the way. That's a very, very promising thing, because it's not usually investors ride all the way and make it a multi-bagger kind of a stock. Having said that, we have seen correction in NTPC already from 450 to 300 levels now. My suggestion would be to continue to hold now. We can see some bottoming formation happening around 290, 285 levels. There can be short-term correction, but continue to hold as the buy price is very appealing. And eventually the stock should again move back about that 350, 360 mark. So hold for now. On the downside, the support for the stock is around 280, and we are expecting 360, 370 levels again.
Sure, expecting 360, 370 levels again, and keep an eye out on that stop loss level. Gaurang, your view on NTPC, fundamentally, does it merit holding the stock, or maybe it's time just to book out profits now?
Well, if you wanted to book, you should have done that 450 plus levels where it was ready. And now it is down 150 rupees from that level to close to about 300. Look, you got in at a stock at a very comfortable price zone of 80. Don't try to exit the stock in a hurry. 435 is the target, and we also expect As a brokerage house, we expect the Honorable Finance Minister to deliver a sizable amount of budgetary allocation for power sector, that is power generation, more so for clean and green power. Hold on to it and try to add on to it at these levels, and 435 would be the target.
Okay. On that note, we're going to slip into a very short break, but don't go anywhere. After the break, we'll continue with more of your stock-related queries, so stay tuned in. Welcome back to Your Stocks on CNBC-TV18. We still have our experts with us, Ashish Kyal as well as Gaurang, Shah, who are solving all your stock-related doubts. Let's move on to the next query then, gentlemen. And we have Rahul Kumar, who's writing to us from Thane, holding 20 shares of JSW Steel at a price of 850 rupees per share. Just making very little profit. 887 is what the stock is trading at. Wants to know whether to look to hold this JSW Steel, or maybe look to sell this one and maybe look at something else. Gaurang, your view on JSW Steel?
Well, no, don't be in a hurry to sell. We have the stock was at 1,000 rupees before we saw this correction seep into the market. From a long-term point of view, we have set aside a target of about 1,000 rupees. If you are not in a hurry and if you have the patience, my request would be to hold on to the stock.
Okay, if you're not in a hurry and you have the patience, you should hold on to the stock. That's the word coming in from Gaurang. Let's move on. And Ashish, your view on the technicals for JSW Steel. Given that in the last 1 month, we've seen the stock fall 11%, does it even merit the viewer to maybe add some more and average out and hold, or what's your view?
I would say right now not to average. It's better to hold on to the stock, but not average right now. We are seeing some pressure. Let's see some kind of a recovery in the stock and the overall broader market also. And as of now, the support for the stock, which is the previous pivot low, comes to around 850 levels. So hold on with 850 as the stock, and the stock managed to.
Okay, I think we are disconnected again with Ashish, but he was saying don't average, just hold on to the stock. 850 levels around that mark maybe is something that he was watching out for. But yes, at least hold on to the stock. Do not average out. That's the word coming in right now. Let's move on to the next query then. We have Bank of Maharashtra as the next stock we'll talk about. Karan Singh, who's writing to us from New Delhi, holding 100 shares of Bank of Maharashtra at a price of 30 rupees per share, currently at 46 rupees per share. Wants to know whether, continue to hold, look to add some more, sell. Gaurang, what's your outlook on the stock for the long term?
Well, honestly, I'll just make a point over here because we don't have a detailed coverage. The point that I want to make over here is, as far as the earnings are concerned, they've been very erratic. On 1 or 2 quarters, they deliver a good set of numbers, and the rest is down in terms of down and out in terms of performance. And that leads to a lot of volatility and choppiness into the stock. Having said that, we would prefer names like IDFC First Bank or a bank, PSU bank like PNB as an alternative investment idea.
Okay, that's the word coming in. Maybe an alternative investment idea could be PNB is also something that Gaurang has mentioned. Let's move on and keep it going with that financial side. Next stock that the viewer has a query on is Manappuram Finance. Jolly is writing to us from Mumbai and she wants to know the fundamentals as well as a technical view on Manappuram Finance for the short term and long term. Manappuram Finance, your view on this one. Gaurang?
Well, we had a buy recommendation. Post that, our targets were in place, and hence we have given out sell or book profit recommendation. On the lower side, we are having a target of 152. So if you are in profits, I think it's time to take home your money.
Okay, if you're in profits, time to take off the money. That's a word coming in on the fundamentals from Gaurang on Manappuram Finance. Ashish, we have Jolly, a viewer who's writing to us from Mumbai and wants to know the technical view on Manappuram Finance. Wants to know whether it's a good level to enter short-term and long-term view both. On the technicals?
Manappuram Finance has shown a smart move from 150 to 190 levels on the upside. Or short term, if he's looking at short term, there can be some pressure. So over short term, I would recommend to be out of the stock. We can see it moving back towards that 165. But from the long term perspective, I think it is better to hold. So there is a different view. Over short term, there can be a pressure, but from a long term perspective, I think the stock can again move back towards 225, which was the earlier peak. So hold on if your time horizon is at least for 1.5 years or more, and accordingly, and on the downside, the support for the stock is going to be around 164 levels.
Okay, keep an eye out on those levels over there for Manappuram Finance. The next query is coming in from Shah, who's writing to us from Mumbai. Holding 40 shares of Torrent Power, price is 1,590 rupees per share, currently making some bit of a loss here. Wants to know whether to hold, average or sell. They have a 1-year horizon time period now. Gaurang, your view?
Hold and average would be my recommendation. This is one of the power generating companies based out of Gujarat, which is one of the most successful ones, having a cash-rich position on the balance sheet, as well as providing power not only to the state of Gujarat, but for neighboring states like Madhya Pradesh, Rajasthan and Maharashtra as well. And we are extremely positive on the power generating sector. Like I mentioned, for the case of NTPC, we remain positive on Torrent Power. Hold and average would be the recommendation.
Hold and average would be the recommendation coming in. And your view, Ashish, on the technicals as well. Last 1 month, stock down 21%. So averages also could be an option that you would also highlight?
See, the stock is now currently moving towards the level of which was seen on 4th of June during the event. And the stock has a very important support at 1240. So I would recommend to continue to hold on to the stock. Maintain 1240 is a stop loss. And if it moves below that, then it's better to be booking profit over short term. But from the long term perspective, the stock can move back towards that 1750 mark.
Okay. Next query is on Infosys. We have Aniket Sharma, who's writing to us from Ujjain, holding 25 shares of Infosys. Price is 1,800 rupees per share, making some bit of a profit here. Wants to know the future prospect of Infosys. Gaurang?
Well, honestly, hold on to it. I think numbers are going to be out on 16th this week. Correct me if I'm wrong. And in terms of performance that we've seen already from TCS, I believe HCL Tech will be out later this evening. We have a hold recommendation on Infosys. And if the numbers are in line or better than what TCS and the others do, then we would be looking at a price revision also. But for now, hold on.
Okay, hold on. And yes, 16th of Jan is what we're waiting out for in terms of numbers from Infosys. And Ashish, your view on Infosys?
See, Infosys is showing a classical bottoming pattern accumulation, and I think it's going to give a strong breakout. It's bucking the trend. If it manages to cross the 2,000 mark, I think 2,250, 2,300 levels is possible. So Infosys is bullish for 2,300 target. One can buy and accumulate at these levels. On the downside, the support for the stock is going to be around 1880.
Okay, keeping an eye out on those levels over there. But that was the last query for today. So thank you so much, Ashish, as well as Gaurang, for joining in with us as always and helping our viewers solve their stock-related doubts. But quick look at the markets today. Broader markets clearly are bleeding. Nifty also 23,100 days lowest point. But the sharper fall is in the broader markets. Nifty mid-cap is down 2,000 points, almost 4% down right now. Nifty small cap also seeing a decline of 4.2%. So days low, and that is where the pain is coming in today, specifically in the markets. But with that, we're absolutely out of time. So thank you so much for tuning in to CNBC TV18. Always remember, you can email us your queries and we will address them with our experts. But don't go anywhere. Last of our trade, we will be going through the market and closing bell. We'll take that action forward.